Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 10th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a correction as we haven't come out of the bear market yet, but in a short-term uptrend after a follow-through day last week. Let's check the trend gauge over here. Neutral on leaders. Short term, we had an upgrade today as we got multiple closes above the 21 on all of the indexes except the NASDAQ 100. Looking for that tomorrow. Played ping pong around the 21 over the last 2 days, ended up closing above it today. We'll see if it can have some follow through strength there. Medium term, 50-day moving average neutral. Also long term, all indexes except for the Dow below their declining 200-day moving average. That's a bearish downtrend there. And what happened today? I mentioned key levels for overnight and for support today in last night's video. We bounced perfectly off those levels and had a nice close. So S&P bounced off 21-day exponential moving average support and regained the 50-day moving average. Here are the numbers for the day. G6 up 1.3%. S&P opened down 0.1%. Tried to sell off. Very volatile chop early. Things got under control late morning, mid-afternoon, and then nice trend higher into the close. S&P up 0.7%. NASDAQ 100 lagging early, ended up positive by 0.85%. Dow also lagging early, caught up to the S&P up 0.6%. Mid caps up 1%. Russell 2000 up 1.5%. Global Diversified 60/40 stock and bond up 0.25%, held back by bonds today. In-house GROTECTION up 0.14%. One of our stocks did not so well today, offset by two offensive selling positions that we did. We'll go through it all when we get to the tail of the tape and review our buys and sells for the day. So let's get into it. Here is the S&P 500. What we do at Revere is active management, trend following. Best case scenario, on the far left of the screen here, the indexes are trending nicely above their short-term 21-day moving average. That's the green line. The 50-day medium moving average, that's the red line. The black line, the 200-day moving average. If we start to top and roll over, the slopes of the lines will roll over. Our stops will take us out of the market. And if we break below this black line, the 200-day moving average, we get to a very defensive position. The reason for that, of course, is this chart. This is a list of all of the bear markets going back for the last 13 years. If you're approaching retirement, you cannot get caught in a negative sequence of returns situation like this. That is why our number one job here at Revere is to protect the downside when the market returns to a healthy posture above the 50-day, above the 21-day, above the 200-day. We can get re-engaged in the market, chalk up some gains, and the gains take care of themselves when you're compounding from a much higher level versus than if you're down 20, 25, 30%. We dodged most of this last year at the low, not even half down. The worst of the sell-off last year, down 27.5%. Markets trying to regain their footing in the face of recession talks. Can Jay Powell engineer a soft landing? CPI on Thursday will probably play a major role in the next move for the markets, but we'll be prepared either way, as always. And if you're interested in an approach like this, give us a shout. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Let's get to the S&P 500 here. Let's get to a 30-minute chart and let's look at those key areas that I talked about yesterday. So 39.50, that's been established as resistance. It's been on the tail of the tape for a while. It's also the 50-day, I'm sorry, it's the 40-week moving average. If you go to a weekly chart here on the S&P 500, that's the black line there showing 39.53. That's where we reversed yesterday. Important to keep track of both the weekly and the daily charts. I stress daily more than weekly here, but those weekly charts are important. So yesterday we got above the 50-day, everything looking great, followed through strength. Uh, on top of last Friday's nice gains, harsh reversal late afternoon, sorry, late morning, all day selling into the close. So what would today bring us? I talked about the key levels, namely this 38.73 to 38.90 level needed to hold. We got as low as 39.77 today. We got slightly below there overnight, but it held, and a lot of volatile chop in the morning, much more than usual. You can see the height of the candles here, but then, like I said, we calmed down, broke above 3,900, back tested it late in the day, and it held, closed at the high of the day. Definitely a win today for the bulls. Let's dig a little bit deeper on this in the 5-minute chart. You can see here how volatile it was. We opened down, immediately up, back down, higher high, lower low, and then we bounced into this 3,900 area, acting as resistance, put in this little cup base, broke out of it right here, 12:40 p.m. Eastern time, sideways a little bit, back tested it. There's the 3,900, held for a while, then broke above higher again into 39, made a high of the day, 39.16, pulled back again, held the 3,900 level again, and then rallied late in the day to close at 39.19, 39.20, the high of the day. Good stuff there. And can we follow up on it? Well, tomorrow, I would expect a tighter range, some consolidation as we wait for the Thursday morning CPI numbers. Inflation has been under control and coming lower over the last few CPI numbers. Very important that that trend continues so that the Fed can start moderating their pace of raising interest rates. Like to see that, and then a move above yesterday's high and a sustained move above the 200-day moving average, which is now below the 4,000 level, is what every happy bull would like to see. NASDAQ 100, there are a lot of macro people out there claiming that this recession is going to take us a lot lower, but that's contrarily, that's a good thing. You don't want everybody on one side of the boat or it tips over. NASDAQ 100 here regained the 21-day yesterday. Closed yesterday, back below it by 0.1%, couldn't hold it. A little bit lower today, bounced off the 80 MA, closed above the 21-day. We want to see this trending nicely above the 21. Here's a 4-week period where we trended nicely above it. Here's a 4-week period where we trended strongly above not only the 21, but the 8. Sometimes it acts as resistance when you're trying to rally in a downtrend. But I place a lot of faith in the 21-day. Mike Webster from IBD has done tons of studies on this, and he's been recommending this 10, 15 years ago when I was attending all of their workshops, putting in the time and the effort to study this system, and I trust it. So 50-day moving average still declining on the NASDAQ 100. Let's go to the Dow Jones Industrial Average. Was the leading index in December. Lagging slightly in January. That's not such a bad thing, though. Still technically the most sound. Monday undercut, reclaim the 21. Look how the 21 was acting as resistance here for 3 weeks as we were pulling back. But that pullback was showing relative strength. This is what the Dow does. When you're in a pullback, shows relative strength. When you're going higher, shows relative weakness, because the more volatile and beta intensive sectors are in the NASDAQ 100, not necessarily in the Dow. Dow's heaviest component is healthcare. Second is financials, and then technology. On the other hand, the Nasdaq 100 is far and away technology, and it's also the highest weight in the S&P 500. So this is why the Dow uh, lags or leads at various times. But a nice pullback and bounce at the 21 today. Let's go to mid caps, which have been showing some outperformance over the last couple of weeks. A little bit of outperformance over the last week also. Pulled back, reclaimed the 50 yesterday, negative reversal along with all the indexes, pulled back, tested the 50-day, and bounced off of it today, in line with what all the indexes are doing. When you see them all higher, uh, I love seeing them all higher, makes my job a little bit easier. And here's IWM, small caps. This led today, rejected at the 50-day yesterday, closed above the 50-day today, coming up into the declining 200-day moving average, where it failed along with the rest of the indexes in November. So also, mild relative strength in small caps over the last 2 weeks. Let's see if that can continue also. That's typically a bullish sign. So we've come off of oversold on the stochastic on all of the major indexes and very quickly got higher. The reason why it happened so quickly is because this is a 14-period look back. And if you're very tight over the prior 14-day period and then suddenly you rise above it even by a little bit, the fact that you're above it increases the slope, the increases the rate of the line of the slope of the line going higher. If I could talk, I'd be golden. But coming into overbought now as we come into the declining 200-day moving average on these indexes. Let's take a look at the equal weight to see how they did today. Here's equal weight. S&P, first of all, up 0.75%, just slightly better. Note it's above the 200-day moving average, and we're showing a double bottom base here on RSP, QQEW, NASDAQ 100 equal weight above the 50-day, coming into the declining 200-day, certainly healthier than the NASDAQ 100. Let's check the VIX. Mark it up, you'd expect it to be down, and it was down 6% today, right above this 20 level, which has provided support, which actually is bad news. Bouncing off of here and going higher would indicate a reversal normally in the market indexes. Let's check the dollar. A lot of the outperformance of emerging markets and international has been tied to weakness in the dollar. Dollar made a lower low yesterday, tight inside day today, sitting at lows going all the way back to July of last year. Um, this big move down in the dollar hasn't necessarily met with a huge move up in the indexes, but it certainly is helping. But like I said, not much going on in the dollar today. Tight. The inverse correlation not as strong as it had been going back a few weeks and months. Let's go to bonds now. Start off with junk bonds. It's normally move in sync with the indexes. Not today. Tight inside day. No panic selling, meaning no credit risk showing up in this chart. BND, broad bond index. Uh, Down today, meaning yields were up, little pullback after this 2-day up move. Let's go to TNX, the 10-year yield. Bonds down, yields up. Nice move today, up 3% on this after two pretty big down days, Monday and Tuesday. Bounce back up in rates on Wednesday today, also in line with what the market did. TYX, the 30-year, also up nearly 3% into this declining 21-day moving average. The dollar flat today. What gold and gold stocks do? GLD, inside day versus yesterday, continues to hold up very well. Look at how the stochastic is hanging, not coming below 60. This is indicating superior relative strength, and you can see that by the way this is just riding the 21-day exponential moving average higher. But the silver metal failed its breakout and has been weaker than gold as of late, down again today, but still holding that 21, got really so extended above it. But you see the stochastic rolling over, and now it's broke that 60 area where gold has been much better. Let's do gold stocks now. and they continue to trudge higher. We sold our nugget today because GDX got more than it got about 2.5 ATR above the 21-day exponential moving average. This doesn't look like a big move up, but it went from 28.50 up to 31.84. Nugget did double that. You can see NUGT, which of course has twice the ATR because it's twice the um, it's a 2 times GDX. This thing's 14% above its 21. Again, over 2 ATR. We'll look to buy this on a pullback, getting into overbought. But we booked our plus 2R 20% gain on it today. So those are the major indexes that we want to review. Let's now go to the tail of the tape. We already covered the VIX, fear and greed at 50, straight up neutral. Toggling between the bull and the bear case, longer term bear, shorter term bull. 9 a.m. Powell's speech was really not policy related. He made some passing comments to the possibility that he keeps talking about price certainty. You got to get price certainty, and how that getting to there could cause some pain, but it really wasn't policy related. But as soon as the speech was released, right at 9 a.m., the futures improved, and that led to nice action during the day. There was some Q&A going on. I didn't really see any significant highlights from it. Day count, this is a confusing one. Up one with a reversal yesterday to net is up two with a reversal in the middle. Um, I'm working on a system related to tracking this. As far as the 8 and the 21-day moving average, third day above for both. CPI Thursday AM is going to be key. Expectations coming into today positive, as long as we held that level overnight, which we did, bounced nicely off of the support resistance area. As you can see, same thing with the NASDAQ 100 bouncing off the 21. Here's the 90-minute volatility that I referenced, followed by the 90-minute base, the 1240 breakout. Pull back to 39.02, tested, close at the high of the day is always good. Sectors, bond yields up today as bond prices were down. Coal also down. For the most part, everything was pretty strong. There were some lagging sectors like XLP in staples in the S&P 500, but biotech strong, gold stock strong, oil service stocks strong, retail and solar very strong. Keep an eye. I need to put FSLR on here. Make sure we track that. That was a standout today. So portfolio, offensive selling, first of all, on AEHR. Why? Well, it's gone up 20% in 3 days for one thing. Day three, higher high. Made a higher high, paused a little bit at this 28 area. That's where we sold, up 20% in 3 days. Like I said, we'll take it. Look for a pullback on this. Can it scream higher? Absolutely. But normally, if I'd had a larger position, I'd have taken some of it off and left a runner. But with this being extended, we just booked it, especially considering some of the reversals we've seen lately in stocks. We're still very clearly not in the all clear. Nugget there, I mentioned that. We sold that into strength also. We took our plus 2R on both of these. Now, the fly in the ointment, yeah, ELF. Next time I see an elf on a shelf, I'm going to take it down. I'm going to stomp on its head. Let's look at what elf did today. I've looked at this chart. I've stared at this chart. Yes, I will admit that it has had a nice run, but this on a weekly chart was a stage 2 base that it broke out of. Very normal entry. The one thing that I will say is, and I didn't realize this at the time, the breakout yesterday the breakout on Friday was on an IBD leaderboard upgrade. When those go out, people stampede in. Here's the 5-minute chart. I imagine they did it right around here. Look at the volume. And then this should have been a clue to me. Actually, it's here. What am I talking about? I imagine they did it early here. And then really not much progress the rest of the day on Friday. The gap down yesterday. We added to the position yesterday based on some stochastics, and then it started to sell off. And this should have been a clue to me to get out I don't like buying and selling the same day. It just and it didn't violate any rules, so that would have been an emotional sale. I talked about where my line in the sand was yesterday. The problem is my line in the sand went through like a hot knife through butter and didn't have a time to get out at a good selling area. So waited for it to bounce up to 54, sold most of it, still held a little bit of it, and then later in the day took a little bit more off. This is we've got a very tiny, less than 1% piece left. Close above the 50-day moving average on high volume. If I can get a little bounce on this tomorrow, as it's oversold very much across pretty much all of the stochastics. There's the 60 oversold, the 30 oversold. I hate selling when these are oversold, but we've got to protect capital. We're buried on the 15. We're buried on the 10. We're buried on the 5, due for a bounce. On that bounce, I'll get rid of it. It's a broken stock at this point and move on to something better. But um, too tight for too long is certainly a thing. Every time it undercut the 21, it reclaimed it. I see the volume being weak here, but that's because of holiday. Relative strength continued to go higher. This was a nice gap up on earnings, made the day 2, day 3 higher high, bounced at the 8 EMA. Really, the problem was not buying it, was that I didn't buy it back here, that I got it here. I still consider this a sound um, consolidation and a stage 2 base breakout. It wasn't late stage, um, but we keep our losses small regardless. This one's going to be we like to limit it to zero point 0.2. This one's going to be about 0.3 because of how fast it fell this morning. So little taking one on the chin, and that's responsible for the underperformance today in house. So where are we now? Okay, so that we touched on the 3 sells and the portfolio changes: offensive selling in AEHR Nugget, defensive trimming on ELF, adjusting the beta down to 0.35. So basically a third of the S&P 500. We'll probably hold it between here and 0.5 until we get the CPI on Thursday. A nice muted reaction on Thursday would be a positive. Bottom line, key level 38.75, 21E holds. Nice bounce off there, reclaim of the 50-day, and the NASDAQ closed above the 21, one close above it. You can see we reclaimed a lot of levels here today. This May, June support, the 150-day, the 50-day, a lot of resistance to chew through, but we made it through today in the afternoon. That's a positive sign very clearly. Let's see what tomorrow and Thursday will bring. All right, now to the focus list. And these are stocks that we talk about. Everybody brings them up on our roundtable. Pre-market RVNC. Alex brought this to our attention. This is the hot new replacement for Botox. You only have to do it once a year instead of 5 to 6 times a year for Botox, and it's supposedly much less expensive. Actually, I got to check on the cost, but it is one time a year instead of 5 or 6 times a year. Great move up yesterday, big volume. You got to pay attention to these. 54% move on 724% volume pulled back today. Let's see what happens when the ADMA catches up to this now that it's at the top of the base. They lose money, but very clearly nice earnings growth over the last 4 quarters. If you've got a quality product and the sales are increasing, the profits will come. So RVNC, next up is ASO. Sporting goods, 3 days up off the 21. Looking pretty nice. QSR. This is Burger King. Really looks like a lot of stocks moved up, pulled back, held the moving averages, and then showing looking for relative strength back above the 21. Not much relative strength there over the last week, though. QSR MedP. This was a standout today. This was a hot stock back in October, November, sold off, held the 50-day. Big move up today on volume, gets it back on our radar, up 6% on 56% above average volume. MDGL, This was the phase 3 approval with the big move up. This did what it needed to do, bounced off the 80 MA. When you get the big inflection point like this, 3 days up, fourth day higher high reversed. The 8 caught up to it. That's an ideal entry point, but no sales yet. That's really why I didn't buy it. That and the fact that if we were in a bull market, this thing it wouldn't even be a doubt. But in bear markets with sell-offs, things with no earnings and sales tend to get taken to the woodshed first. Oil stock HES. This is international. Looking good, back above the moving averages. Pull back on lower volume today. Mobileye, we own this, got stopped out of it, regaining its luster to closes back above the 21-day moving average now. LSCC, Lattice, this is a semiconductor equipment company. Nice move off the 50-day moving average. 2 straight days, 2 higher highs. ACLS, this is definitely one of the leading semiconductor equipment companies, on a bit on the thin side though, but you can't argue with the action there over the past 4 days. And let's go to GE and GE Healthcare. So here's GE. I started talking about this when I was reading about the GE Healthcare spinoff that took place last Wednesday. GE's been stronger than GE Healthcare, just continues to go higher with really nice volume. It's now got growth numbers again. So not earnings in the last quarter, but projected for 2023, 50% earnings growth with a 32 PE after spinning off healthcare. Let's take a look at GE Healthcare. It's forming a nice little tight between 58 and 60 uh, IPO pattern, and let it keep going. At least it's been traded for 5 days now. After 8, we'll see where it is relative to the ADMA to see. I like the idea. I like the PE at 12 and the 22% earnings growth in 2023. Anytime you see growth with a PEG ratio of less than 1, you got to pay attention to it. And finally, for solar, and I forgot about this after this big sell-off, but reclaiming. Look at that. Look how quickly that got back up 7.4% today, above average volume, nice volume patterns. 3 nice days up for solar, relative strength back at the high, near price. That happened quickly. Let's go to TAN. I talked about how TAN was one of the better acting sectors today. You can see it's cleared back above the 21 coming into the 50-day moving average. First Solar looks much better than that. That's going to wrap it. As always, love to hear from you. Email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much you can keep. Someday when we're back in a bull market, I won't have to say this every day. We'll be talking about handling stocks in an uptrend and their gains, and offensive selling and defensive selling, and um, we'll all be singing songs as we take a look, singing happy songs as we watch our profits grow. Believe it or not, it does happen at times. You might have to think back to late 2020 for the last really good raging bull market, but the last 13 months have been tough. But we've kept our capital very near the high point, so we're ready to compound it when the market gets better. One way to look at it, if you're an optimist, and I am, is that every day that we're down is one day closer to the next bull market, and we'll be ready for it. So, like I said, again, it's not how much you make, it's how much you keep. And I will wrap it up now, ending Tuesday, January 10th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.